Let's continue our JSE company results service now with Hulamin. Their year-end numbers to the end of December last year have just come out. What have we got here? Attributable earnings up 66% to 133 million. Headline earnings per share up 128%, but that's skewed because it says here it includes employer allocation of 118 million from pension fund conversion and cash flow before financing activities positive at 72 million. In the Power Lunch Johannesburg studio is Richard Jacob, who is the CEO of Hulamin. You've got to be a bit of an accountant to understand these numbers, because operating profit up 44%, turnover down slightly. Maybe talk about, first of all, the semantics and get that pension fund business out the way, Richard.
Thanks, Lindsay. Yes, a fairly complicated set of results in the sense that there were a number of one-offs in them. Talking about the pension fund, we outsourced and converted our pension fund from a defined benefits to defined contribution, and in that settlement there was an allocation to the employer of 118 million, which if you take that and strip it out of the headline earnings, you're left with 64 million, which is about a 20% increase in underlying performance improvement year on year at the headline earnings level compared to 2011.
Okay, so up 19% without what you've just described, is that correct?
Correct.
Let's have a look now at the actual operational performance of things. You say we've had a difficult first half. Now, a couple of CEOs that we've had on Power Lunch recently have said exactly the same thing. What happened that was slightly better in the second half than the first half? Was it, in your case, mainly because of the weakening of the South African rand?
Yes, look, Hulamin is a business that is exposed to exports in a very large way, and consequently a weaker rand helps us quite significantly. Unfortunately, we did have a problem in our plant in the first half of last year. We had quite a major failure to one of our hot rolling mills, and as a consequence we lost about 25,000 tons of sales. That failure was in the first half of last year, although the sales loss was in both halves. Clearly the weakening rand helped us in the second half, and we were quite pleased with our performance in the second half, where we clawed back a lot of those losses.
Obviously, your domestic demand is very much linked to the economic performance at a macro level in South Africa. And again, like a couple of other people that we've spoken to recently, they've talked about rising costs and imports. And you talk about aggressively priced imports and, of course, the rising cost base. How significant a headwind are both of those things for you?
These are very significant issues, Lindsay. I was looking, in preparing for our results, I was looking back on our local sales, and we have had our best year in 2006 in local sales. Each year since then has been weaker than that. 2012 was no different. Manufacturing in South Africa is not in a great place. There are floods of imports at all levels of the value chain, aluminium being a prime example. Most of these come in from the east. In fact, all of them come in from the east. Not helping us, obviously, is the lack of import duties. South Africa is a very open economy, and it really does put us under a lot of pressure, increases our exports, and therefore increases our exposure to global markets, global factors, which, as we saw in 2012 with the European crisis, the tail end of the US crisis, China slowing down, really makes for quite a volatile environment.
Well, let's talk about something positive now, because I think it was in November of last year that you announced a deal with Nampak. You've done an awful lot of research on this particular sector of your business, or potential sector anyway, and that's what's come to fruition. 2013 to 2015, a good deal with them. How good a deal is it, and can it be extended past 2015?
Yeah, look, this is very exciting for us. To date, beverage cans in South Africa have been made out of steel bodies and aluminium ends and tabs. What we're very pleased about is that our customer Nampak has decided to convert the market to aluminium. Interestingly enough, when we did our initial expansion in the mid-90s, that project was actually done designing for the aluminium can in South Africa. So it has taken some time, but we're very excited. Really, it's a great positive for South Africa, not just for Hulamin. Aluminium cans are very recyclable. They have great value as scrap. And therefore there's a lot of wealth to be created for scrap pickers, scrap collectors, scrap accumulators, scrap processors. We'll obviously be in the market buying scrap, buying used beverage cans, and it's a great closed loop recycling, which Hulamin will participate not only as a purchaser and processor of scrap, but obviously also the processor of aluminium can stock for the market.
On the international side, we haven't got a chance to go into it in detail, but you talked about lack of demand from China, or relative lack of demand from China in the first half of last year, but obviously China's starting to pick up now with its manufacturing sector expanding, whereas it contracted for so much of 2012. Your prospect statement, though, for next year says market conditions continue to be subdued in 2013, placing pressure on margin and mix optimization, as you call it. A gradual improvement in demand is anticipated, which is good news. The bigger picture, though, aluminium versus steel, is this a trend that's being embellished, and can you take advantage of it?
Yeah, look, aluminium is a great product. It's very light, it recycles particularly well. So in things like automotive, aluminium consumption in motor vehicles has grown from 3 or 4 kilograms per vehicle globally sort of 10, 20 years ago to in excess of 150 kilograms. That's an enormous growth in consumption, as you can imagine. And now, after beverage cans, the automotive market is the second largest market for rolled and extruded aluminium. What aluminium does in vehicles is it makes vehicles lighter and therefore more fuel efficient, lower carbon footprint, as well as the end of life recycling opportunity. Aluminium in a rubbish dump or any trash facility, pickers will go in and pick out the bits of aluminium and leave everything else because of its high value. So it really is an attractive product for the future, and we're very excited to be exposed now to both beverage cans as well as the automotive market.